Trillions of dollars of value vanished from global equity and crypto markets. Where did it all go? What's up, y'all? I'm here with my good friend and co-host for these Friday editions of the podcast, Marshall Johnson, here with me.
Hey, what's up, buddy?
Hey, and this is our opportunity to discuss one of our weekend reading articles with you. Every single Friday, we send out one email with 4 articles, trending topics in the financial planning space to help you have a better understanding of what's going on in the markets, to help you make better decisions, and to stay up to date on the latest in strategies, along with white papers and event invitations, all kinds of cool giveaways. You can sign up by just texting us at 866-482-9559. Just text WR to 866-482-9559. We'll send you a link to get signed up for that email, or you can just visit us at retirewithpurpose.com if that suits you better. And we're going to highlight an article for you today from No Opinion, a blog by Noah Smith, and it is titled, "Where Does the Wealth Go When Asset Prices Go Down? It Vanishes into Nothingness."
I like the subtitle there. It vanishes into nothingness. I see where he's going here. There's been a lot of those headlines here recently, like, trillions of household wealth vanishes overnight. You know, the last 6 months have been a little challenging for the stock markets and the crypto markets. So we're seeing a lot of those headlines about trillions lost. And, I think sometimes we can get wrapped up in what that actually means.
Well, it's good to understand what that actually means. I think people are, what do you mean it was lost? Like it just vanished? It just got destroyed? I mean, what do you mean it's gone?
Well, you don't see those headlines on the reverse, right? Like trillions of dollars of wealth created.
That's so true. Yeah, but we love fear, right? The media loves fear. They know that sells over greed.
Much easier.
I was looking at a headline right now from CNN. Americans lost $500 billion in wealth in early 2022. $500 billion in wealth is simply gone. $3 trillion from the stock market. You have also an increase in the kind of helped balance it out. That's why it's $500 billion versus $2 trillion, because they're also taking into consideration in this article the value of real estate and personal savings rates. Anyways, there's a lot of headlines out there talking about wealth being destroyed today. And one of those that Noah put out there was over $2 trillion of notional value has now been wiped out compared to the peak in late 2021. I read that, and I think my initial, he misspelled national. He meant national value has been lost.
Value?
But no,
notional.
He meant notional value, right? Notional, by the Webster's Dictionary, is existing only in theory or as a suggestion or an idea, right? It's notional value. Is it real value that's been lost, or is it just this notion that value is gone? I think it's gone. Not really sure. Just kind of taking a stab at it.
It's gone. It reminds me of that South Park clip where kid deposits his check and then the banker routes it through foreign currencies and it's gone. It's like, what do you mean it's gone? I just gave you the check. He's like, nope, you lost it. Sorry.
And that is what he's saying here. He's saying it is gone. Where did all that wealth go? It didn't go anywhere. It didn't go from one place to the next. It didn't go to cash. It didn't go to bonds. It didn't go to stocks.
That's a good point.
It's gone. It vanished. It stopped existing. And you have to ask, well, what do you mean it's just vanished? Like that's not normal for us humans. We think, well, this cup is now empty. That means I dranketh it, right? Or I poured it into your cup. It went from one place to the next. But that's not how it works in the equity markets. And I think for those of you that are trying to better understand how to trade equities, what the value of a stock is, and how that's determined, that's where this gets really interesting, because I think this is a topic that we don't talk about very often, right? This isn't a topic that most people really understand, and it's a topic that a lot of people have questions about too. Where did it all go? Well, financial wealth gets created and destroyed not just because the real economy changes, but because the amount we pay for financial assets changes, right? The financial asset itself didn't change. The amount that we're willing to pay for it has actually changed. And wealth isn't a physical property of the universe itself, as Noah says. It's just how much humans value stuff. Crypto, real estate, gold, and the first full stop here is to understand mark-to-market accounting, how they're actually valuing equities or crypto for that matter, which is different than real estate.
Yeah, so mark-to-market accounting comes to mind. I remember back during the financial crisis is when I was first kind of inundated with the topics on mark-to-market accounting. It's basically like, well, whatever the asset is worth in market value, that is what we're going to count it for accounting practices as well. So, trying to think about that, well, during the financial crisis, there was all these CDOs that were illiquid and very troubled assets that if the banks had to write them down as worthless, they would have been upside down. So understanding mark-to-market accounting.
Yeah, and that's how things are valued in the equity markets, right? It means all shares or units of an asset are valued at the current market price, whether they're traded or not, right? The market price is the price of the shares that are getting traded for all of the shares. So I think Noah offered a really good example here. He said, what if you took 1 million total shares of stock in a company, we'll call it Noah Corp here, and only 1,000 shares of Noah Corp get traded on any particular day, and they go for $300 a share. Now, it's not just those 1,000 shares that are being valued at $300 a share. It's all those 1 million shares. So now the market capitalization or market cap, which you often hear talked about in the financial media, this can help you with a little insight into what market cap is. That means the market cap of Noah Corp is now $300 million. Even though only 1,000 shares traded out of 1 million, they're all going to be valued at whatever they traded at in that given day. I mean, I think that's kind of it's going to be a surprise to some. They go, that's how it works. That is how it works, and it's kind of strange, right? But how else are you going to do it unless there's an actual appraisal of the company itself.
Right.
And that's not how the markets work.
Yeah, it's not how the markets work, and they're changing. That price is changing so quickly. Earnings estimates, you got earnings calls and stock price jumps, or new products do well, or the expectation is that shares are going to increase.
I might think my house is worth $1 million.
Right.
But it's weird. It's got all kinds of weird shapes in it, and it's got a massive living room and no bedroom, and right, and it's got 2 bedrooms.
Yeah,
and
right.
So, but what if I can't sell that because nobody else really thinks
likes
it's worth
your
it?
taste or your style?
Maybe you put
whatever.
$1 million into the house, but man, nobody likes it, right? Nobody wants to buy it. So you end up having to sell it for $100,000, or you got to give the darn thing away.
Right.
It's only worth what others are willing to pay. It doesn't matter what you put into the asset, whether it's a home or whether it's a stock. It's all comes down to what people are actually willing to pay for these things. Next full stop is what happens when you take money out of that stock.
Yeah, so I think the tendency is to think like, well, people must be taking money out of stocks and putting it somewhere else, right? It's just not really what's happening.
No, and I think there's another good example there. Let's just say that you sell a share at $300 today to me. So you sell a share to me for $300. Tomorrow I sell it back to you for $200. All that happened was $100 of cash went from your account to my account over 2 days. The amount of total cash is all the same, right? There's no more cash in our combined accounts. Yours and mine, it's all the same cash. No money has been put in or pulled out. No cash. But the amount of wealth in the world has changed. It's went from $300 in value down to $200 in value because that's what it traded at, and everything is going to be valued in that same way when that happens. And I think we quite often we just don't think about that. And I think it's a really important concept to realize that the wealth in the country is measured by whatever is traded in any given day, and then simply saying, yeah, well, nobody else would be willing to pay more. So that's got to be what it's worth. This is why trading volume is so important when it comes to understanding whether you've got a really truly significant move in the S&P 500 on any given day, because there could be very thin trading volume. You could have a very thin day where very few shares are actually changed hands, but it's going to revalue the whole market. And this is what a lot of stock pickers and investment managers are paying close attention to on the day-to-day basis, because if we get a low volume day where there's a big drop in the market, that means that there might be some value opportunity to pick up there.
Yeah, absolutely. Especially when you take it down to the company level, you start looking at individual companies, how often they're traded, and it might give you some insights into momentum and where you might see some opportunities.
Yep. Then we have price impact, and this has important political implications as well, and really understanding price impact. So what is price impact? Well, first we have to understand that in real life, asset prices aren't determined, as we said, by fundamental value. There isn't an appraisal that's going on Noah Corp, and we're not just looking at Noah Corp's earnings and cash flows. It's really supply and demand that's going to run the value of Noah Corp, not the fundamental value. And this is one of the things that's made Warren Buffett so successful, right? He always focused on fundamental value and ignored as much of the noise as he possibly could. And that noise is the trading, right? The mark-to-market value may be wildly out of line with the actual value of that company.
Right, absolutely. And so you start talking about the price impact a little bit there, Casey. I mean, if Elon Musk unloads all of his Tesla shares, he is going to dramatically decrease that price.
Right. It's not just supply and demand. There's also the other side of that, which is someone concluding that because the founder of a large company, such as
lost
Elon,
faith. Yeah.
You go, oh man, he's dumping
there
his
must
shares.
be real
we
problems.
saw this last year, right? It's go, oh my gosh, he's selling his stock. This must be. I mean, he had tax obligations to pay, and he had to liquidate some of those shares. But that drove the share price down because there were some going, oh, and he's losing optimism, right? He's getting pessimistic with this stock. You see this with the CEOs of a lot of large companies.
Well, he's getting bored with Tesla, and now he's talking about Twitter, and that upsets the Twitter board. It's like there's real price impact to that social value that people are putting on those opinions and what they think somebody is or is not doing.
Right, and let's say there's one shareholder of Noah Corp that owns other outstanding shares, and that means let's say they own the majority of the shares, right? They own $299 million in shares. Do you think they can get $299 million worth, even if the other a small chunk traded at a high price on any given day? If they go to liquidate their $299 million position, they're not going to get $299 million. That number's somewhat fake, especially the larger position you have. The less real it is because you have illiquidity to take into account. You don't have enough liquidity to get the value.
Have a fair price.
And this is why it has to happen over long periods of time. And it just CEOs and founders of companies are in such a difficult position when they're publicly traded because they're going to drive that share price down in two ways. One, supply and demand. Another, by actually just the inference and assumptions that individuals are going to make when they go to liquidate those things. So this also brings into the discussion something that's maybe a little bit more political. Hey, we're not taking any sides here. We're just giving you things to think about that are kind of interesting to contemplate. And that is, does true inequality exist at the level that we think it does, right? Does true wealth inequality exist at the level that we think it is? That is, inequality of potential purchasing power, right? Well, maybe not, right? Because a lot of those extremely wealthy individuals, take for instance Bezos, take for instance Elon Musk. I mean, some of the richest people in the world, they're usually, their net worth is largely illiquid, tied up in stock options, companies that they founded and ran. And so you have to wonder, man, is the gap that big? Because if they ever wanted that cash, they're not going to get nearly that net worth, right? That list of the wealthiest individuals in the world, I think we have to take that with a grain of salt, because the net worth numbers you read in Forbes 400 or in Wikipedia, they're more like indicators. They're nowhere near exact measures. I mean, they're probably wildly off from a valuation standpoint versus your average Joe that's worth $1 million, $2 million bucks, right?
Yeah,
maybe you got absolutely. a $500,000 stock portfolio. I mean, that's going to be pretty in line with what your real net worth is, because it's a smaller dollar amount. It's very liquid. It's not concentrated in one position, versus someone that has 90% of their net worth wrapped up in one really illiquid position. You might say it's liquid because they can sell it, but it's illiquid because if they sold it, they would drive the stock price so low that they would end up with a significantly lower net worth at the end of the day.
Yeah, I think it's a fantastic discussion to have when we start talking about what is wealth, what does it mean when it seemingly vanishes. I love the upshot here at the end where he talks about don't assume money is flowing somewhere else in the economy. That's not necessarily how it works. But he does make a good point here. He says, but paper wealth is as real as wealth gets, and People whose assets get marked down may cut back on spending, which would impact the real economy.
Yeah, well, and that was number 3, his third point he makes here at the end, which was, this might, he says, this should make people reconsider their support for taxing unrealized capital gains. I thought it was called No Opinion. And
he's sharing
the No Opinion blog here. I'm going, that sounds like an opinion here. He's not really in support of taxing unrealized capital gains, which is really what? That's having a wealth tax in the United States. So consider this. I think it's something that's interesting to consider. We're going to tax the wealth of super wealthy individuals that are largely illiquid. And if we tax that wealth above a certain threshold, it's going to force them to liquidate chunks of their wealth, maybe in significant portions, which could shift the market and drive down value, destroy wealth in the United States, which is going to impact Joe Blow with his 401k that he's been saving money in for the last 20 years, right? It's really easy, I think, to just take a certain position for or against something, when it comes to politics, but it's so nuanced. It's not much different than financial planning. There are so many different factors to consider.
Once you change this, it affects this. And,
the decisions that are being made in Washington aren't easy decisions for anyone to make. There is so much to take into consideration at the end of the day in order to make the best decision for this country. So, hey, this wasn't designed to be a political discussion in any way, shape, or form, but I hope that you found it really insightful from better understanding some of the headlines that you're reading on a day-to-day basis, at the very least.